Hey everyone, welcome back to We Are Cosmic, the place where we break down the biggest moves in crypto, finance, and the global money system, without all the confusing jargon. If you've ever wondered how some companies and institutions seem to control the flow of money around the world, today's video will blow your mind. We're talking about a shift so big that it could redefine how trillions of dollars move, literally, across the planet. Imagine holding the keys to the pipes that move the world's wealth. That's the reality Ripple is building right now with the XRP ledger, and it's no longer a theory. For years, many thought XRP was just a sleeping giant, stuck in legal battles and speculation. But 2026 has changed everything. XRP is no longer just for sending money quickly. It is transforming into the infrastructure for real-world asset tokenization. Basically, a system that can turn traditional assets like bonds, real estate, and even diamonds into digital tokens that move instantly on a blockchain. To put this in perspective, the current crypto market is around $2.5 trillion. Sounds big, right? But Ripple's institutional target is $100 trillion. Yes, that's trillion with a T. We're talking about a liquidity gap that XRP is uniquely positioned to fill. This isn't just about retail payments or Bitcoin-style speculation. We are entering the age where XRP becomes the settlement layer for the world's largest financial players, from banks to multinational corporations. Senior executives at Ripple, like Marcus from Ripple X, have confirmed this shift. The XRP ledger was designed from day one for enterprise-grade finance. That means it wasn't just made to send money fast, it was built to handle enormous volumes of value safely and transparently. Now, with the SEC settlement behind them in 2025, XRP's regulatory overhang has been removed, and institutions are accelerating their adoption. We are seeing whale wallets holding over 1 million XRP each increase by 14% year over year. This is a sign that big players are quietly accumulating before the full $100 trillion migration goes live. Here's why this matters. The world's financial system is still largely analog. Money often moves slowly, trapped in traditional banking delays. XRP changes that. With a ledger that settles in under 4 seconds, trillions of dollars that used to sit in limbo can now circulate instantly. Imagine freeing up that kind of liquidity across the globe. That is exactly the kind of efficiency Ripple is building. But here's the question for you. Can the fixed supply of 100 billion XRP handle the demands of even a fraction of this global wealth? Or will the price need to adjust dramatically to match this level of liquidity? This is not just speculation. It's mathematical necessity. As more institutions onboard, the network isn't just a fast payment rail anymore. It's becoming the foundation of the next financial system. Before we dive deeper, I want to ask you, are you just watching this transformation, or are you positioning yourself to understand it before everyone else? Drop your thoughts in the comments below. Your perspective matters here because this isn't your usual crypto discussion, where we decode the biggest moves in crypto and finance. In part 1, we talked about XRP's massive potential and the $100 trillion target. Now, let's dig into the mechanics of how this is actually happening. How is XRP moving beyond retail payments to become the backbone for real-world assets and institutional finance? Let's understand the concept of real-world asset tokenization, often called RWA. Simply put, tokenization means taking something valuable in the real world, like real estate, corporate bonds, or even diamonds, and turning it into a digital token on the XRP ledger. Once it's digital, these assets can move instantly across borders, settle in seconds, and be traded efficiently without the old banking delays. For example, a $280 million diamond transaction in the UAE was recently tokenized on XRP. This shows that even ultra-high-value physical assets can now operate in the digital space seamlessly. Ripple isn't doing this alone. They are building an institutional pipeline, meaning they are working directly with banks, corporations, and treasury operations to make this system usable at scale. The XRP ledger now sees over 2.3 million transactions per day. And this is not just speculation. Institutions are actively integrating their treasury systems to prepare for these tokenized migrations. Essentially, Ripple is creating a liquidity flywheel. The more assets that flow through XRP, the more valuable and useful XRP becomes, attracting even more institutional activity. This is where things get interesting. Most people focus on the price of a token, but here, it's about structural demand. XRP has a fixed supply of 100 billion tokens. When trillions of dollars in global assets start moving on the ledger, the demand for XRP as a settlement layer grows automatically. This isn't hype, it's logistics. Every token starts to carry immense value because it becomes the key to moving massive amounts of capital efficiently. Let's talk about institutional adoption in more detail. Companies like Volvo, American Airlines, and other Fortune 500 firms are already using treasury platforms that integrate XRP liquidity. Ripple has even acquired strategic infrastructure companies to make this process smoother, ensuring that these organizations can settle huge transactions instantly. By controlling the interface that these companies use to manage their finances, Ripple positions XRP right at the center of global money flow. This is what sets XRP apart from other tokens. It's not just traded on exchanges, it becomes embedded in the financial systems of the world's largest corporations. Now, we also need to consider stablecoins like RLUSD. Some skeptics argue that stablecoins might compete with XRP for institutional transactions. And it's true. Corporates might initially prefer stablecoins because they avoid price volatility. But here's the key. Ripple sees stablecoins as a gateway. Once companies are comfortable moving RLUSD on the XRP ledger, they naturally progress to using XRP for on-demand liquidity across multiple currencies. In other words, stablecoins help institutions learn the system, and XRP becomes the high-efficiency tool for cross-border and multi-currency settlements. The network itself is evolving to handle this enormous load. In 2026, the XRP ledger is introducing zero-knowledge proofs for enterprise privacy, hooks for smart contracts, and sidechains compatible with Ethereum. This transforms XRP from a simple payment coin into a full-stack financial operating system capable of hosting DeFi protocols, lending platforms, and programmable finance for institutions. So the picture is clear. XRP is not just another crypto. It is actively being positioned as the settlement backbone for trillions of dollars in institutional capital. The more assets move through XRP, the more the ledger's value, utility, and influence grow, creating a self-reinforcing system where institutions benefit, XRP demand increases, and the global financial network becomes faster, cheaper, and more efficient. Where we explore crypto in a way that makes sense no matter your experience level. In the last part, we talked about how XRP is being adopted by institutions and real-world assets are moving on-chain. Now let's dive into the big picture. What happens when trillions of dollars flow through a fixed supply asset like XRP? Let's set the stage. XRP has a maximum supply of 100 billion tokens, with about 59 billion circulating today. That's a fixed, limited number. Now imagine even 1% of the world's tokenized assets moving on to XRP. That's already an enormous amount of money compared to today's crypto market. Ripple's target isn't just a few trillion, it's aiming for 10% of a $1 quadrillion global market in derivatives, real estate, bonds, and other legacy financial instruments. Even if a fraction of that migrates, the pressure on XRP supply is massive. This is where the concept of structural demand comes in. Unlike retail speculation, this is not about people buying XRP because they hope the price goes up tomorrow. This is about institutions needing XRP to move value efficiently. Every transaction, every settlement, every cross-currency transfer could require XRP. And since the supply is limited, the price becomes a reflection of necessity, not hype. In other words, XRP's value is driven by logistics, the need to make trillions of dollars move instantly without bottlenecks. Let's make it simple. Think of XRP like a highway. Right now, there's a moderate amount of traffic, but Ripple is about to open a new interstate that connects every major financial city on the planet. Suddenly, trillions of dollars worth of transactions are vehicles trying to move across that highway. The highway has a fixed number of lanes, XRP tokens. If more cars, capital, try to get through than there are lanes, what happens? Prices go up. That's the basic supply and demand math at play here. Let's talk about the migration mechanics. When institutions move assets onto the XRP ledger, they're tokenizing legacy financial instruments, stocks, bonds, real estate, and even commodities. These tokenized assets can settle in under 4 seconds instead of the traditional T+2 or T+3 days in normal banking. This efficiency alone creates massive utility-based demand for XRP. The ledger doesn't just move value faster, it replaces slow analog systems entirely, meaning trillions that used to be stuck are now circulating in the global economy. There's also an important factor to consider: stablecoins versus XRP. Some argue that corporations might prefer to move digital dollars like RLUSD because it avoids price volatility. While this is true, Ripple's strategy is smart. Stablecoins act as a gateway. Once companies are comfortable using RLUSD for daily operations, they naturally transition to XRP for high-speed cross-currency settlements. This is a gradual buildup of demand that strengthens XRP's position as the primary liquidity layer. Finally, let's not forget the mathematical necessity of price adjustment. The more value XRP must handle, the higher its transaction price must be to move the same number of tokens efficiently. This isn't hype, it's logistics. The XRP ledger is like a digital bridge. The wider and heavier the traffic, the more valuable the bridge becomes. And with trillions preparing to move, the math alone suggests a potentially exponential price effect over time. Ripple isn't just building software, they're buying access to the pipelines that global money flows through. In early 2026, Ripple executed a series of high-profile acquisitions totaling $2.45 billion. These weren't random purchases. Each company was chosen to control the points where corporate treasury and banking decisions are made, ensuring XRP is at the heart of institutional capital movement. First, there's Hidden Road, acquired for $1.25 billion. This company provides prime brokerage services connecting hedge funds, investment firms, and banks. By integrating XRP directly into Hidden Road's infrastructure, Ripple ensures that trillions of dollars in trading liquidity can flow through XRP automatically without the friction of legacy systems. Next is G-Treasury, purchased for $1 billion. This is an enterprise treasury management platform used by hundreds of large corporations, including giants like Volvo and American Airlines. By embedding XRP liquidity directly into G-Treasury, Ripple gives these companies the ability to settle transactions instantly and move cash globally with minimal friction. Think of it as putting XRP into the financial operating systems that corporations already rely on every day. The final acquisition in this phase is Rail for $200 million. Rail specializes in B2B payments, allowing Ripple to capture transactional flows from multinational corporations. With this infrastructure, XRP becomes the default bridge for cross-border corporate payments, making it far more than just a speculative token. Together, these acquisitions form what we can call the Ripple corporate stack, a fully integrated ecosystem where XRP is naturally embedded into the systems that manage global finance. This is a structural approach, not a marketing tactic. Ripple isn't asking companies to use XRP, they own the platforms companies already use, so adoption happens as a byproduct of everyday operations. Why is this so important? Because the world's largest corporations and banks handle trillions of dollars every day. Any inefficiency in settlement or liquidity has massive economic consequences. XRP's ledger, with sub-4 second settlement times, removes this bottleneck. With these acquisitions, Ripple ensures that every dollar in corporate cash flow could potentially move over XRP rails. This is where the liquidity flywheel accelerates even faster. More corporate transactions mean more XRP demand, which strengthens the network's utility, which then attracts even more institutions. We also see this strategy reflected in Europe. Ripple obtained the Luxembourg EMI license, giving them regulatory approval across 27 European Union member states and access to over 450 million consumers. With compliance and licensing in place, Ripple isn't just building technology, they're creating a legal, operational, and financial corridor for massive institutional capital to move seamlessly. So Ripple's acquisitions and licenses are more than growth. They're a clinical takeover of the global financial infrastructure. Hidden Road captures investment liquidity, G-Treasury embeds XRP into corporate cash flows, Rail ensures cross-border B2B adoption, and regulatory licenses remove friction for global capital. This ecosystem makes XRP the central artery of the next-generation financial system. The XRP ledger isn't static, it's evolving. In 2026, Ripple has introduced major technical upgrades designed to support enterprise-scale finance. The first of these is zero-knowledge proofs. In simple terms, zero-knowledge proofs allow institutions to verify transactions and asset ownership without revealing sensitive details. Think of it like proving you have money in your account without anyone seeing the exact balance. This is critical for corporations that need privacy and security while moving billions of dollars on-chain. Next is smart contract hooks and EVM-compatible sidechains. Smart contracts allow automated financial agreements to execute without human intervention. With EVM compatibility, the XRP ledger can now interact with Ethereum-based applications, bridging DeFi and institutional finance. Imagine a world where bonds, loans, and tokenized assets can be programmed to settle automatically, instantly, and securely, all on XRP. This turns XRP from a fast payments coin into a full-stack programmable financial system. The ledger also introduces on-chain lending protocols. Corporations can now lend or borrow assets directly on the ledger without relying on traditional banks. This reduces friction, lowers costs, and creates new revenue opportunities for companies using XRP. It's no longer just a ledger. It's a financial operating system where liquidity flows freely, settlement is instant, and risk is managed at scale. Another key point is scalability. With these upgrades, the ledger can handle millions of transactions per day with sub-4-second settlement times. This is crucial when trillions of dollars in assets start moving on-chain. Traditional banking systems operate on T+2 or T+3 settlement times, meaning money sits idle for days. XRP's upgrades eliminate these delays, creating a more efficient and responsive global financial network. These technical improvements also accelerate the liquidity flywheel we discussed earlier. The more sophisticated the ledger becomes, the more institutions trust it. And the more trust, the more assets move on-chain, which in turn increases XRP demand for settlement and liquidity purposes. It's a self-reinforcing system that grows in size and importance every day. Importantly, these upgrades maintain XRP's decentralized and resilient nature. The amendment process ensures that no single entity, including Ripple, can make unilateral changes. This makes the ledger a truly public utility capable of supporting a global economy. Finally, let's talk about DeFi integration. By enabling EVM compatibility and programmable sidechains, the XRP ledger can now host decentralized finance protocols at an institutional scale. This opens up possibilities for automated lending, tokenized derivatives, and other financial products that were previously limited to experimental DeFi networks. For the first time, the benefits of DeFi, speed, automation, and transparency can be applied directly to real-world institutional finance. Where we break down crypto with clarity and insight, we've covered XRP's $100 trillion potential, real-world asset adoption, institutional integration, and technical upgrades. Now let's talk about the future, how XRP could reshape the global financial system and what this means for the market. One of the clearest indicators of institutional interest is the ETF inflow streak. Over the past 55 days, XRP spot ETFs have seen continuous inflows totaling over $137 billion from major issuers like Bitwise, Franklin Templeton, and 21 Shares. This is not retail hype, this is smart money positioning. Even as prices remain sideways or experience minor corrections, institutions continue accumulating XRP steadily. This pattern shows a silent but powerful buildup of structural demand. Now let's connect this to market adoption. By embedding XRP into corporate treasury systems, acquiring strategic infrastructure, and securing regulatory approvals like the Luxembourg EMI license, Ripple is creating direct channels for trillions of dollars in daily corporate and institutional cash flow. As more corporations adopt XRP-based systems, the network effect grows stronger. Every transaction, every treasury settlement, every tokenized asset increases the utility of XRP and reinforces its role as the central liquidity layer for institutional finance. This brings us to price potential. Remember, XRP has a fixed supply of 100 billion tokens, and demand is being driven by necessity, not speculation. When institutions move large amounts of capital on-chain, the ledger doesn't just need more tokens. It needs higher value per token to handle the volume efficiently. Think of XRP as the bridge over which trillions of dollars flow. As traffic increases, the bridge naturally becomes more valuable. This is why many analysts predict that even if only a fraction of the $100 trillion target migrates, XRP's price could experience nonlinear growth, driven by structural demand rather than retail frenzy. Let's also consider RLUSD and stablecoins. Some skeptics worry that stablecoins might reduce XRP's transactional demand. While stablecoins are useful for minimizing volatility, Ripple positions them as a gateway to XRP adoption. Corporations get comfortable using RLUSD for routine transactions, then naturally transition to XRP for on-demand liquidity and cross-currency settlements. This creates a pathway that gradually increases XRP's systemic importance, turning what might seem like competition into a stepping stone for broader adoption. Looking ahead, the next decade is critical. XRP is no longer just a payment token. It's evolving into a full-stack financial operating system with smart contracts, EVM-compatible sidechains, zero-knowledge proofs, and on-chain lending. The ledger is prepared to handle trillions in assets and millions of daily transactions. Combined with strategic acquisitions and regulatory clarity, Ripple is not just participating in global finance, it's shaping it. Finally, here's the big question. Are you watching this transformation, or are you preparing to understand and position yourself for it? XRP is moving from retail speculation to institutional necessity. The groundwork is being laid today, and the decisions of smart money and strategic corporate players are writing the blueprint for the next generation of financial infrastructure. So as we close this 6-part series, remember, XRP's real value isn't in short-term price swings, it's in the friction it removes from the global economy and the trillions it will help move in the years to come. Whether you're an investor, a developer, or just someone curious about the future of finance, understanding these structural shifts is essential. Drop your thoughts in the comments below. Do you see XRP becoming the core of global institutional finance? Or do you think stablecoins and other networks will dominate? Let's discuss it. I read every comment here on We Are Cosmic.